Welcome to this course on Basics of Accounting Standards. In this course, we are going to understand and appreciate the concept of accounting standards and what are the objectives of accounting standards and what are the benefits and limitations it has. Then we'll also go through how the accounting standards are set and what are international accounting standards and what is the importance of adopting international financial reporting standards as global standards. So this is a technical course which is going to focus on accounting standards, and it is of more relevant and use for the students who take accounting as their major. So this is a course which is going to be useful for professional students who are taking up a professional career in accounting, and this is a course which is going to be useful for a banker, and this is a course which will be useful for finance managers. So this course is going to talk about basics of accounting standards. Let's get started. So what is accounting standard and why do we want an accounting standard? Accounting standards are basically written policy documents which can be issued by an expert accounting body in a country, or it can be issued by government, or it can also be issued by any regulatory body. And when they issue, they can cover aspects like recognizing accounting transaction. I mean, how to recognize accounting transaction, or how to measure an accounting transaction, or how to present an accounting transaction, or how to disclose an accounting transaction. So the accounting standards are basically the written policy documents issued by appropriate person, what we have discussed, and these documents are basically going to cover the aspects like recognition, measurement, presentation, and disclosure of accounting transactions in the financial statements. So why these accounting standards are set, and why you should say that, or why you should frame a policy for recognizing, measuring, presenting, and disclosing. The very objective is to ensure dissemination of information. That is, the very purpose of accounting standard bodies is to promote the dissemination of timely and useful financial information to investors and certain other parties who have interest in the economic performance of business entities. So if you want to ensure the financial information disseminates and it reaches the appropriate person, the financial information should be presented in financial statement form. So if it should be presented in financial statement form, it need a set of uniform policies. So these uniform policies are provided by accounting standards. So accounting standards basically they reduce the accounting alternatives in preparing the financial statements, because accounting standards are set by or set within the bounds of a rationality, so they ensure comparability of financial statements of different enterprises. So to put it in a nutshell, accounting standards are written policy documents which are issued by expert accounting body or regulatory body with an intention to promote dissemination of information, basically the financial information, for the people who are interested in the economic performance of the entity. And these accounting standards they actually reduce the accounting alternatives, so you don't have liberty to follow any method of accounting as you wish, because once an accounting standard comes, or once an accounting standard is issued, you are bound to follow, so that 10 different companies following 10 different accounting practices is avoided. 10 different companies will have same set of practice, and all the 10 different companies would become comparable because their financial statements or their financial information are prepared following an accounting standard, and all of